Hey everyone, welcome back to Corporate Decoder. Today we are diving into a filing from Ashford Hospitality Trust, and let's just say their hotel might have needed a serious wake-up call before this deal, so let's jump right into it. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join us. Ashford Hospitality Trust just announced a deal to sell one of their hotels. The hotel is the Hilton Houston NASA Clear Lake, and they're selling it for $27 million. The sale is expected to be completed in June of next year, but like any deal, it needs to go through the usual closing steps. The company released a press statement talking about this deal. So it's official, however, Ashford Hospitality Trust is saying not to count your chickens just yet. This sale might not go through at all. Now let's look at some specifics that might provide some context for this sale. This Form 8K filing also includes information about the company's stock. Ashford Hospitality Trust has several types of stock listed on the New York Stock Exchange. There's common stock, preferred stock Series D, Series F, Series G, Series H, and Series I. Each has its own trading symbol, making it easy to track on the market. All of this can get a little complicated, but really it just means they have a bunch of different ways for people to invest in the company. Now let's dive into the company behind this transaction. Ashford Hospitality Trust is set up as a real estate investment trust, or REIT. They own hotels. They focus on investing in upscale hotels across the United States. The main idea is to own hotels and make money off the revenue from those hotels. A REIT structure allows it to pass income directly to shareholders, and Ashford Hospitality Trust focuses on hotels that can bring in steady profits. This sale suggests a possible shift in strategy. Selling a hotel could be about raising money, improving their portfolio, or just getting rid of something that isn't working out. It's worth noting that Ashford Hospitality Trust has been navigating a challenging environment for several years, especially with the ups and downs in the hospitality industry. Selling the Hilton Houston NASA Clear Lake might be a move to strengthen the company's finances or to focus on better performing properties. It could also suggest they see more value in having cash right now rather than owning this particular hotel. Now, let's put this sale into a broader context. The hospitality industry has been facing some pretty big changes recently. Things like travel habits, economic ups and downs, and even competition from things like Airbnb can all affect how well a hotel does. Ashford Hospitality Trust, like other hotel owners, has to keep up with these trends to stay competitive. Selling a hotel, especially one in a specific location like Houston, could be a way of adapting to these changes. Houston in particular has its own story to tell. As an area tied to the energy sector, it can see big swings based on oil prices and the overall economy. The Hilton Houston NASA Clear Lake being near the Space Center might also be sensitive to changes in government spending and space-related tourism. So what's the bottom line here? Ashford Hospitality Trust is selling a hotel for $27 million, which is a significant deal that could point to bigger moves within the company. It might be about raising cash, changing their investment focus, or just dealing with the realities of the hotel industry. Looking at Ashford Hospitality Trusts, there are some clear strengths and weaknesses. One of their strengths is their focus on upscale hotels. By targeting this market, they aim to attract business and leisure travelers who are willing to spend more for better experiences. This can lead to higher revenue and profits. The company's ability to manage and improve its properties is also a plus. They have a track record of renovating and upgrading hotels to increase their value and appeal. However, there are also weaknesses to consider. One of the biggest is their debt level. Ashford Hospitality Trust has a significant amount of debt, which can be a burden, especially if the economy slows down or if travel decreases. Managing this debt is crucial. The company's performance also depends heavily on the overall economy and the hospitality industry. Any downturn in these areas can negatively impact their revenue and profits. Looking ahead, there are risks and opportunities for Ashford Hospitality Trust. One of the biggest risks is the potential for economic slowdowns. If the economy weakens, people may travel less, which would hurt the hotel industry. Competition from other hotels and alternative lodging options like Airbnb is also a constant threat. On the other hand, there are also opportunities. The company could benefit from increasing travel demand as the economy recovers. They could also expand by acquiring and developing new hotels in attractive markets. Finally, they could improve their existing properties to attract more customers and increase revenue. Overall, Ashford Hospitality Trust is in a mixed position. They have strengths in their focus on upscale hotels and their ability to manage and improve properties. However, they face challenges related to their debt level, economic uncertainty, and competition. the company's future success will depend on their ability to manage these risks and capitalize on opportunities. Alright, that's our breakdown of Ashford Hospitality Trust's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.